Yo, what's up, guys? Welcome back. This is Jelly Trades the Market or Jelly Trades, and I hope you guys are having a good day. Here I have some really important information that could literally change the way you trade forever, and it was literally hiding right underneath our noses, literally right underneath your noses. If you did not take any notes during ICT 2022 Mentorship episode 3, you totally missed this key gem. And I know I did. Honestly, it's been a whole year and I've missed this key gem. This is going to change the way you look at market structure like forever. Literally, you will not take a bad market structure trade. I mean, you will obviously take a bad market structure trade because, every trade is not guaranteed to win. But this will definitely increase your probability. And I'm just finding out about this and I'm super excited for you guys. So right here, what we're looking at is my 2022 mentorship notes. And I'm taking my time and I'm writing clear cool notes. My notes is looking nice. And we're gonna cover an order block theory video very soon. But first I want to bring you to the market structure shifts, which is frankly more important than the order blocks itself. So what what is different? What this is a key secret that has just been hiding right underneath our noses, literally. And I'm gonna show you what it is. So right here, market structure shifts. This is one key element. Market structure shifts is only important if we have taken stops. We know that. We know that. Obviously, we know that. It could be a double bottom. It could be a single low that it has to be traded to or below. Anything that retail is viewed as support. So these are all quotes from ICT episode 3. Um. So what is the key thing that I want to show you guys? It's right here. It's the fair value gap. So let's just quickly go through. Right here, we have a higher time frame buy side liquidity. And then we have a market. We have a high right here. We have no highs until we have this higher high. That's clear, concise, correct. But what we do have is once we broke that high, once we broke this high, we have a fair value gap right here. And that's the secret, guys, is the fair value gap that literally is created right after we break structure. This is exactly what you guys need to be looking at in your charts. And this is the secret that, what we would think is, all right, is a fair value gap right here. We break above, no fair value, no fair value gaps after. You know what I'm saying? We would enter right here and get destroyed. Why? Because there's no fair value gap that breaks the structure, literally breaks the structure. Here we have another example. Right here. This is what ICT traded himself. You can go back and check. So here, clean. We have a swing low. We have a fair value gap that breaks it. Look at this fair value gap right there. This is bro. This is gonna bring your trades up completely, literally completely. Here's another example right here. This is the same 1 minute analysis right here. So right here we got a swing high. Oh, so we do have a swing high right here, right? But note that we didn't have a fair value gap that broke that swing high. So a fair value gap here, but did that fair value gap break that? No, it's right here in the middle of a leg, which is still good. It's good to have fair value gaps. That shows displacement, not itty bitty fair value gaps, but good big fair value gaps. So remember, we have liquidity down here. We just took out buy stops or sell stops. We have our swing high right here, fair value gap. This is your entry. 1, 2, 3. Your stop loss is right here. You could even enter right here because this is 1 minute and you have, whatever. So look, that's an entry right there. Boom. Even look at this right here. ICT didn't even talk about this, bro. ICT didn't even talk about this right here. There's a little scalp right here. Look, swing low, fair value gap. This is a high probability market structure shift right here. Let's say you entered even right here. You got some points. Not that good. All right, let's say you entered on this high probability order block that we're going to be covering. Why is that a high probability order block? We took stops, blah, 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 blah. I'm not even going to cover that in this video because I want you guys to just be on this market structure shift. So let's say you would have entered up here. you actually got some pips down. You got some pips. But there's obviously generating liquidity. So then we go up. And then same on this is a 1 minute. Look at that. We swing low, fair value gap. This is a high probability market structure shift. So where do you enter? Boom. Write it down. Buy stops or yeah, sell stops, sell stops, sell stops. Discount, fair value gap right there. You liquidate all your shorts. So right here, basically what I'm trying to tell you guys is look for the fair value gaps that break structure. So right here, I have a little checklist for you guys. All right, listing the correct steps to the market structure shift. Liquidity has been deeply swept. So what I mean deeply swept, I mean something like this. This is a wick. This is the liquidity, deeply swept. Not a little poke, you know, not even just a little one tick down. That's not deeply swept. And this is a rule that I'm making. Not what ICT said. But I think ICT, you know, they're still, he says a lot of time, they still have a business down there. You know, sometimes you would see in the charts, we have one tick below that swing low. That's a relatively equal low. You know what I'm saying? Still expect price to go down there. Literally. Please do. Because it will. So we're going back. So deeply swept right here. When price trades above an old high or below an old low, it doesn't need a close above. So we don't need a close above. So right here we have a close above. Well, we don't need a close above unless we just need a fair value gap that breaks it. And I'll find an example, and I'll get back to you guys with that. The next candle after it, it goes above an old high or below the old low, has to finish creating the fair value gap. That'll be our entry. So basically, right here we have one candle, two candles, three candles. In the second candle, there has to be a fair value gap. And the second candle has to break the market structure. That's what it has to be. And if you think about it, that creates a little swing low, a swing high pattern right here. So there's literally a market structure break right here. So I'm just going to cut it here, guys. Make this video nice and short so you guys can do your research. And please watch. I see before you even leave a negative comment, oh, this is not what you're supposed to do. This doesn't make sense. Watch ICT episode 3 and take notes, because I was taking notes. Every single thing he says, I would make sure I listen to it and I'll put it in my journal. So if you guys don't believe it, watch it and then come back to the comments. But if you guys like this video, please subscribe. Please like, and if you didn't like it, tell me why you didn't like it. Thank you. Have a good day. And yeah, Jelly Trades out. See you guys.